Hi everyone, this is part one of our show with Stephen, which, as you can tell, was really enjoyable, but we went a little long. So instead of removing anything, we've broken it down into two parts. If you enjoyed this podcast, please subscribe, like, and share so we can spread Bitcoin education to other people like yourself. BitcoinProsperityPodcast.com.
The reason why I got interested in Bitcoin as for a store of value, it was really because of the peer-to-peer cashless electronic delivery of buying of goods, right? So that's what I really believe in, and that's where I think the best use case of Bitcoin is.
Welcome to the Bitcoin Prosperity Podcast with your host Gordon, that's me, and Ferris from CoinCompass.com, enabling you to safely buy and securely store your Bitcoins. All resources are in the show notes and description, including our full disclaimer. Visit BitcoinProsperityPodcast.com to subscribe and discover other free content. Welcome everyone to another Bitcoin Basics podcast, a very special episode. I think, Faris, we're up to episode number 44, so let's get ready for that 50th. Today's block height, proof of recording, according to Blockstream, is 625,040. And the current price of Bitcoin at 9th of April is 7,363, according to Bitstamp. We have a special guest today, but before we get to that, Faris, I'm still in, level 3 lockdown at the beach? What's happening in your neck of the woods?
So I'm still in level 4 lockdown in New Zealand, which I'm very grateful for. I've got about 200 acres of land behind me that I can play on. And my next door neighbors have a dam where we've been kayaking on. So I've got it pretty sweet compared to the rest of the world. And yeah, our very special guest today, we've got Stephen McClurg. He's a CIO of Exponential. And Stephen, thank you for joining us all the way from, I presume, sunny California?
That's right. Thank you very much for having me.
Oh, so we're going to launch into a whole lot of different things. Stephen's got a very interesting and fascinating background, recently involved in blockchain startups and formerly a bond trader. So we're going to be looking not just at Bitcoin today, but Bitcoin's role in the current economic backdrop. So Stephen, I've got a lot of questions for you. So at some point, you're just going to have to tell me to shut up or just end this meeting and leave, because I don't think I'll ever stop asking you what I'm interested in, because, yeah, fascinating stuff. But yeah, one of the things I do want to talk about is you wrote an article recently, which we'll link to, entitled "This Time is Different," which many people will be familiar with as the Reinhardt book, where nothing is ever really different. But when QE first came out, a lot of people presumed it would lead to inflation, just the incessant printing, lack of a better word, printing of money would lead to inflation. And we didn't see that. We saw deflation in cash, but inflation in products. So what's your take on the current environment, QE infinity? And are we ever going to see inflation?
Yeah. Thanks for the question. One of the things that I was looking at 10 years ago when we were doing all types of government programs here in the U.S. with 3 and 4 letter acronyms, including QE 1, 2, and 3, was when is inflation going to set in? Because most economists argue that anytime that there's money printing, inflation will ensue shortly after. Keynes was really the only person who had some caveats to that. Keynes did say that inflation isn't always a monetary phenomenon. And his theories were that creating more money, creating more fiat money would eventually lead to inflation, but it was also a subject to very long periods of time. But inflation is also a construct of price, and price, of course, as we know, is a construct of supply and demand. So what happened in 2009, when there was all the money printing then, was that people never really had increase in wages. So even though unemployment went to very low levels, wages never went up. So discretionary spending and discretionary income always stayed pretty flat. So there was really never a demand side of the supply-demand curve. At the same time, the government was printing money and supplying low interest rates. And of course, banks and investors were supplying cheap capital to corporations who had goods that they needed to sell in order to pay their debt service. So interest is cheap. Companies that should have gone out of business didn't go out of business. And they just kept producing goods that people probably didn't want, but they were at such low levels that people bought them anyway. So it drove supply up, demand stayed flat, and goods and services actually decreased in cost in a lot of areas. So we never really saw the inflation that we expected to see with those monetary policies. Today, we will probably experience a very similar environment. Despite the fact that there is cheap capital, interest rates are negative globally. So people are actually paying for the right to hold bonds, which is quite an interesting phenomenon that's been happening for years now, particularly in Europe. And a lot of these zombie companies simply aren't going away, although there will be some that will because of COVID-19. So what we should expect to see is continued wage stagflation, and we should continue to see products and prices going lower, including things like oil. So I don't know if we'll see inflation in a lot of the goods and services that people are thinking of.
So, and just for our listeners, if you're not familiar with what a zombie company is, that's a company that basically is simply staying alive by accruing more debt and not through profits. And I read recently that, I can't remember the exact number, but I think it was more than 50% of companies in the Russell 2000 were zombie companies. And that was before the outbreak of COVID-19.
Yeah, that's exactly right.
Sears, Toys R Us.
Yeah, I mean, and you look around, even retailers like Nordstrom here in the U.S. Some of these may not be global brands, but Nordstrom, Macy's, these are companies that are going to have issues when, especially right now, people are realizing that you can buy pretty much anything on Amazon, and Amazon can also replicate any goods that can be that are created in other companies. So we'll see how long some of those places last, some of those, brick and mortar retail.
So COVID-19, do you think it is a black swan event, or was it really just a spark that lit this giant bonfire created by QE Infinity and the G8 central banks?
Yeah. So, I really see it as a white swan event. I'm not going to say many economists and professional investors have been seeing this coming for the last 2 years, possibly even 3 years. I know I started writing about it about 2 years ago that, debt has gotten to ridiculous levels for companies issuing high yield bonds, particularly, the zombie companies we were talking about earlier, where the risk for the interest rate that you're getting, or the coupon that you're getting for buying some of these companies, were so low. In many cases, 5.5% is what you're getting paid to hold a company that could default, that's barely making its debt service. So and this was 2 years ago. So a lot of us saw this coming and have really been anticipating it. Yes, the S&P here in the U.S. Has gotten to levels that are unsustainable, and really, I would say October, November of last year, of 2019, is probably when it looked like it was going to peak. Now, bull markets by definition are people that are buying expensive assets, hoping that somebody else will buy them for a more expensive price, right? So these bull markets can actually last longer than the price is justified. COVID-19, like you said, was simply a spark that caused people to look at the markets. Now, unfortunately, it's also caused a lot of personal and bodily harm and damage to a lot of people, and deaths. But it's changed the way that humans are going to behave for months, if not years, or maybe an entire generation. which could lead to potential problems in a lot of sectors that weren't experiencing problems 6 months ago. So that's really, that's really the other shoe that I expect to fall over the next month or two that could cause markets to go down further.
Yeah. So one thing I want your opinion on here is that so with the housing crisis 2008, there was a lot of things happening in a dark room, as Michael Smith put it in his fascinating book Boomerang. How basically people treated money in a dark room. And I think what we're going to see now is just the unraveling of these central bank policies where they were unaccountable, unelected officials. And there has been some talks amongst academics that we could see a debt jubilee for countries like Japan, where they somehow wipe out their own debt. Now, in your opinion, what would that mean for assets like gold and Bitcoin if that's something that governments start talking about?
Yeah, that's a really hard question to answer because the last time, or really, the first time in my career that I saw, bending of the rule of law here in the U.S. was when there were the bankruptcies of Chrysler and GM. And if you remember when that happened back in 2009, I want to say it was February 2009, what the government did was allowed the unions and labor to actually be more senior than the bondholders in many respects. So that bent was actually quite difficult, for the bonds of those companies, for instance. Now, auto showroom paper, anything that was securitized through an SPV, actually did quite well, but that was unique, and what that foreshadowed was this could happen again. Rule of law could actually be bent or changed in favor of people that are going to be casting votes in a coming election, so to speak. Mm-hmm. So I don't think it's that far out of the question for there to be a debt holiday in many countries. What does that mean for gold and Bitcoin? That's difficult. I think gold is historically been a safe haven asset for many people, and it has the potential of going up. Bitcoin is a strange beast because it is a store of value for people. I wouldn't say many people, a small contingent of people that believe that it has the potential of becoming either a global currency or global store of value, much like gold does. So, and there's still a lot of interest in it, because of the way that you can actually transfer it quickly, relatively safe. So, I can't really say that I think Bitcoin will go up in value because since 2017, it's been treated like a risk asset by many people. Mm-hmm. It's become a speculative asset. So anytime that there's a risk off trade, I believe, Bitcoin's going to suffer, and anytime there's risk on it, it'll probably do quite well. But I do think there's a chance that it could become a bit of a flight to safety like gold does.
Yeah, it's encouraging actually to hear you say that, because we had this conversation with Leah and Tyler, and we said 2019, Bitcoin was heavily correlated to the price of gold. That broke in 2020, and Bitcoin's been correlated to the trend of the S&P 500. And Gordon and I basically launched this business because we had people coming to us 2017 saying, how do I buy Bitcoin? And we're experienced educators, and we wanted to teach people about Bitcoin. And they're like, no, I don't want to know about it. I just want to buy in. And so absolutely, it was just people not knowing what it was and just jumping on that FOMO. But yet now we're starting to see on Wall Street some people who were very much anti-Bitcoin. Don't know if you're familiar with Jared Dillian, Daily Dirt Nap, Keith McCulloch at Hedgeye. They were very anti-Bitcoin, and now they've changed their tune to say, okay, we understand this thing as a store of value. Do you think we're starting to see the adoption by Wall Street as to actually want to get in Bitcoin?
Um, I don't see. I see a handful of people, but I don't see mass adoption as a store of value. Like you said, it's sort of a telltale sign when in 2017 people just want to buy in and make a quick buck and don't really want to learn about what it is. So that does create a bit of a problem where you're bringing in a ton of speculators. But what I do see on Wall Street is people that want to speculate in it, which is, in 2018 when we had the options market that was created, that ultimately led to people shorting it all the way down to about 3,600. So I think in order for it to really become a store of value, or what the reason why I got interested in Bitcoin is for a store of value, it was really because of the peer-to-peer cashless electronic delivery of buying of goods, right? So that's what I really believe in, and that's where I think the best use case of Bitcoin is. The store of value argument kind of really came into play also in towards the end of 2017 as people were marketing it. It became a marketing tool, but of course, any store of value is a store of value because people believe it is. And because enough people believe it is, it has become a store of value for some people. But yeah, back to the point on speculation. I think there's a lot of speculation in it right now, and in 2018, a lot of that, we were hoping a lot of that speculation would go out so that it would actually, could be used for what it was intended to, which is, peer-to-peer electronic cash.
Do you want to learn how to safely buy and securely store your Bitcoins? CoinCompass.com is running a free 2-hour webinar on Sunday, 31st of May. To register and for more details, visit CoinCompass.com/webinar.
Obviously, at the moment, Bitcoin's like a speculative store of value, but to a non-investor like myself, something like a Bitcoin ETF, to me, actually doesn't really make a lot of sense. Does it make sense to you?
A Bitcoin ETF?
Yeah.
Oh, no, it doesn't make any sense at all. From a lot of different reasons. In my career, I actually launched a ton of ETFs, since about 2009, I believe. And just to put it into perspective, when I think about regulators in the U.S., whether or not they would accept something like a Bitcoin ETF, when the filings started coming through, I thought that it would never happen, right? I didn't think they would ever accept it because, really what ETFs are meant to do is be an instrument for a diversified set of investments, number one. And number two, there's really stringent rules around ETFs, and particularly around level 1, 2, and 3 assets, which is, from an accounting perspective, it pertains to liquidity. And to really put it into perspective, I spent a lot of time trying to launch a investment grade credit ETF that was actively managed, and it took 5 years for the SEC to approve it. And this is investment grade, average credit rating of AA. Right. So, just given what Bitcoin is, I really don't see it something that's going to be favorable, by regulators in the U.S. Second of all, back to the Satoshi white paper and what Bitcoin is. It's supposed to be a peer-to-peer electronic cash instrument, so that I can send money around the world and receive goods and services at any time, quickly and secure. And if you're putting that into an ETF, all it does it promotes less of the peer-to-peer cash use case and more of the speculative use case, and it strays away from really what the thing that it's supposed to be.
Yeah, on that point, Gordon and Stephen, so we've heard I know I've read a couple of arguments where they say because the derivative markets for gold is so big, it eclipses the actual physical gold, that it's the tail that's wagging the dog. So, the argument goes that it's, the paper gold market that is actually suppressing the price of physical gold. What's your opinion on that? And is that a concern that if eventually at some point in the future we do get Bitcoin ETFs and we do get the leveraging of Bitcoin?
Yeah. Well, gold has been a really tough asset since Bretton Woods 2. And the reason being is nobody's really tied to it anymore. Although I will say in the last 20 years, many countries have used it as a diversifier to their own treasury. If countries have been forced since Bretton Woods to buy U.S. bonds in order to stabilize their own currencies. And going even further back in time to the original Bretton Woods, when dollar became the reserve currency of the world and was tied to gold at basically $35. But Bretton Woods too eliminated that gold standard, and the U.S. dollar was essentially just the reserve currency of the world. So yeah, it created a situation where U.S. can just issue bonds unlimitlessly, and countries have to buy them in order to maintain their currency. And of course, the reason why they want to maintain their currency is so that they're competitive in their own manufacturing and exports. Given that situation, gold has kind of taken a back seat since Bretton Woods too. But like I said, foreign currency reserves of countries, particularly places like Russia, have bought massive amounts of gold to hedge themselves and even try to get away from buying dollars and bonds to support their currency, supporting with gold instead. So that's been the major use case. Back to paper gold versus physical gold. Of course, physical gold doesn't move around a whole lot. It's too expensive. It costs a lot of money to store. But gold itself has become a pretty speculative instrument, and it did become pretty speculative leading up to the financial crisis. All asset prices were going up. People were speculating on real estate, and then of course right after the last financial crisis, people were heavily speculating on gold. So what was interesting here in the U.S. is, for about 4 years, 2005 up to 2009, there was a mortgage lender on every corner. There was as many of those as there were Starbucks, right? After 2009, there was stores that said, "We buy gold," on every corner. So you could see the potential speculative run up in people buying physical gold and paper gold as fast as they can, because thinking that inflation would ensue, which never did. So yeah, it was highly speculative.
One thing that's actually interesting, I'm in Southeast Asia at the moment. There's been several articles over the last 3-4 days. I'm not sure about bullion, but at least at gold stores, they're completely out of gold. You basically can't buy anything, from a piece of jewelry to even a couple of coins. There's videos of stores that are completely wiped out. There's no gold. So people, the everyday person on the street is basically cleaning out all these stores of gold. So I find that fascinating.
Yeah. Well, it's also very similar to the oil market, right? There's a lot of paper oil out there, and there's a lot of speculators on it, but nobody's taking physical delivery of oil, right? And which is a whole other subject we could get into if we wanted to.
Yeah, actually, one thing we brought up off camera, which is soft commodities, because I know that with the majority of commodities, especially your grains, they're at record supply, and record supply is just meeting demand. But the prices are even lower than the 1990s, and that's not even taking into account inflation. So what in the world is leading to such cheap grain prices?
You said such cheap grain prices?
Yeah, so I know like wheat, corn. I mean, I haven't looked at charts since COVID-19, but I know prices were incredibly low leading into beginning of 2020. Yeah, for most soft commodities.
Yeah. So that's actually a really good point. And the reason why I step back and question is because those prices are starting to go up. Due to COVID-19, a lot of places like Kazakhstan, for instance, are shutting their borders to exports of wheat. And Kazakhstan, for instance, is, I believe it's the 10th largest exporter of wheat in the world, and the largest exporter of wheat in Asia. So it's quite interesting what could possibly happen if countries continue to shut their borders, and they are doing it. They're shutting their borders to exports, thinking that we need to make sure that we have enough supply for ourselves. The other interesting thing that's happening is here in the U.S., and this is going to happen in probably a lot of other countries as well, particularly in Eastern Europe, which also is a big exporter of wheat. Places like Hungary, for instance. Is a lot of countries like the U.S. rely on overseas labor, seasonal labor, to come into the country and harvest, whether it's fruits, vegetables, or grains. And with borders being closed, you're going to run into problems where a lot of the food products are simply going to rot on the branches, so to speak. This has already been a problem in California, really for the last 10 years. There's been a lot more border controls between the U.S. and Mexico, for instance, and a lot of foods. There weren't enough labor to for all the foods that are available. Now, we haven't had much drought. We had a couple of years of drought, but so there's always been an abundance, but right now that really is something to worry about. It's also true, say, in Eastern Europe, for instance. There's a lot of migrant Romanian workers that go to Hungary seasonally to harvest wheat and food there as well. So we'll probably see, not just in the U.S. but everywhere, a shortage of food and potentially a big blockage to the food supply chain.
It's funny you mentioned that. Just yesterday on the radio here in New Zealand, I heard that because fruit pickers here in New Zealand, 50% of them tend to come from overseas, whereas the latest results show it's 95% are now New Zealanders picking the fruits.
Wow, that's absolutely amazing.
But this was also a problem in the late 20s, early 30s in America, wasn't it? You actually had people starving, but crops rotting in fields because the farmers couldn't pay anyone to pick them.
Yeah, that's right. That's exactly right. Yeah, but we also had, but at the same time, there were also areas of the country that were suffering from drought, right? So a lot of the plains areas in the U.S. were suffering from drought, which historically, that was the breadbasket of the world at the time, the 20s and 30s. So that's when there was the giant move to California, and people were moving to California to work on the farms and fields. But you're absolutely right. In the areas that were producing, they couldn't pay the people to come do it. And the places that weren't producing were, people were simply starving.
Just last point on that, Stephen, here in Southeast Asia, in my undisclosed location, they've actually stopped exporting of rice. And I'm living in a country that's the world's second largest exporter of rice. This seems like a massive problem. Are we seeing just, say, a short-term protectionism, let's protect our food supply, or do you think this is going to have a long-term knock-on effect?
Yeah, generally these issues have very long-term effects. And this is actually something that I'm concerned about here. It's not just for the food supply. Even in the U.S., there's been a lot of xenophobia, particularly with COVID-19 originating in China, and I've seen that globally as well. So not only are people preventing other people from coming from other countries, but they don't really want to support their neighbors, so to speak. They want to make sure that they have enough for themselves. But the other attitudes that we really need to look out for is, when I was talking about, zombie companies earlier, and some types of industries that are going to suffer that didn't fall into that category, hospitality, travel. When travel restrictions are lifted and quarantines are lifted, 3 months from now, do you really think people are going to be flocking to airports or to get on cruise ships or waiting in line to eat at a good restaurant or even congregating in a busy restaurant? I really don't think that is going to happen. I think human behavior has changed just in the last month. and is going to continue to change, and it'll take a long time for those habits to change back to what we consider normal of what we were looking at 3 months ago. So there's going to be a lot more economic, problems for food service and travel and hospitality going forward.
Not to mention the 12+% unemployment.
Yeah, that's exactly right. I can speak to the U.S., but in the U.S., 12+% unemployment. I'm estimating it's somewhere between 12 and 15, and we're going to probably know better tomorrow. And even whatever number we get tomorrow, it's probably going to be higher than that, because here in the U.S., not everyone immediately applies for unemployment insurance when they're able to, and it's usually a lagging indicator. So when people do finally apply to go on unemployment, two things happen, right? Number one is when you're getting money and you're not having to work, you typically don't work for a long period of time, whether you can or you can't. There's some people that just want to get back to work, and that's true, but there's other people that will take their time. The second problem is, and it's particular to COVID-19, is if you're getting paid unemployment insurance and you're fearful for your life and you're fearful for the life of your family members, are you really going to take a job that pays you a little bit more than what you're making in unemployment insurance right away and put yourself in harm's risk? I don't think many people are going to do that. I think people will, for the most part, in this particular situation, go as long as they can without having to put themselves in harm's way if they believe that that's the case.
Faris, do you have a question? Because I'm going to go down a rabbit hole of the FedCoin digital dollar in a second.
I'll just make one comment and I'll throw it to you, Gordon. But yeah, you just mentioned people's habits will change. And just this morning, I was talking to a colleague her husband has been working from home, and his boss has found that his whole team is far more productive. And he's thinking, well, even if the isolation is lifted, we might just stick to working from home. And there's a whole economy that can be affected by that. You're not buying petrol, you're not paying for parking, you're not getting your coffee next door. There's a whole knock-on effect from people simply not leaving the house and going into town.
Yeah. It's funny because I'm a bit of a natural introvert anyway. And working from home for me has actually, or being forced to work at home, I've been a lot more productive because I can't separate myself from actually home life. It's not like I can go, I'm in Southern California and they've closed the beaches and the trails. I typically go surfing 2 or 3 times a week. I go mountain biking. I go hiking or running. And all of those things have been eliminated for me. So I just wake up in the morning and check my phone when I first wake up, and I work for about 14 hours, and then I might eat dinner and might shower and then go to bed. So so there's a lot of people like me out there that'll probably, continue to work from home, be more productive, and probably be too productive, in an unhealthy way.
You can see me and Gordon smiling along with you here.
I've been social distancing for the last 40 years. It doesn't affect me. It's exactly the same.
That's exactly right. I have a really good friend and colleague for many years. When I was at Guggenheim, and we would always joke around that we were the only 2 people that we knew that didn't like to shake hands and didn't like to stay within 5 feet of each other. Now we have to stay 6 feet from each other. So when we saw each other, we would just kind of always look at each other and bow and not shake hands. We're like, oh, thank God, somebody else like me. Now everybody's become like me.
And that's the end of part 1. This will continue in part 2. Go to bitcoinprosperitypodcast.com, where you'll find links to subscribe to our various podcast platforms and YouTube channel. Thanks for watching or listening. Please visit coincompass.com/free to register to our socials and discover other free content. Subscribing, liking, and following helps this content remain ad-free. Until next time.